Thanks very much, Tim, and thank you for listening to the Magnetite Mines story. The next slide, please. This is our standard disclaimer. Our recent share price, we've been a little bit soft recently, just following a $15 million net rights issue, which we completed last month. We currently have a market cap of around $100 million and cash in the bank of about $20 million. Next slide. This slide shows the breadth of experience we now have at Magnetite Mines. A couple of months ago, Jim McCurley and Paul White joined our board, and most recently, Simon Wonke had joined in the last couple of weeks. Simon has got over 40 years of tier one mining company experience, and most recently he was the chief executive of ArcelorMittal's mining business. We've got a great breadth of experience at the board. I've just recently moved in as chief executive officer. Mark Eames is now our chairman. He's got experience with Glencore, Rio and BHP in iron ore and other bulks. And Trevor Thomas is now heading up our study director. And Trevor's been with Magnetite Mines for over 12 years in a geology role. Thanks. I always enjoy presenting this slide. This shows the premium that the 65% Fe benchmark is achieving over the standard reference 62% benchmark price. And the burgundy coloured line shows the converse, the discount that the 58% product is achieving against 62%. So it's undeniable that premiums are widening for high-grade products. We're going to produce a 68% magnetite, high-grade magnetite concentrate. So we're anticipating an even higher premium than the 65% reference price. And this is all a function of the decarbonisation of the iron ore industry and the iron and steel producers seeking higher grade concentrates or high grade ores to reduce the consumption of coking coal. Next slide, thanks. We have a very, very large resource base at Magnetite Mines. Total resources are 5.7 billion tonnes. 3 billion tonnes of resource at the Razorback iron project which is the focus of our development at the moment. 1.2 billion tonnes at Ironback Hill, which is about 15 to 20 kilometres down the road from Razorback. And our new project, which recently acquired Muster Dam, 110 kilometres from Razorback. We've got 1.5 billion tonnes at Muster Dam. It's a 2004 resource, I should add, at Muster Dam. The resource is obviously in South Australia, located about 240 kilometres north of Adelaide. South Australia is an extremely good and supportive environment to be developing in. It's ranked in the top 10 in the world for risk under the Fraser Institute survey. Next slide, thanks. We're currently a long way through our definitive feasibility study. We plan on developing the project in 3 stages. First stage is 3 million tonne capacity plant. And I've got a schematic there showing the modules. That's 1, 2.5 to 3 million tonne capacity module you can see there. We plan on replicating that module 2 or 3 times to get to a final stage of 7 million tonnes of concentrate production. Next slide, thanks. Once again, this highlights the scale of our resource. We have a very, very large scalable resource. Stage 1 of our project development is going to use is going to rely on 8% of our mineral resource. We're only touching a fraction of our strike and an even smaller proportion of our total tenure area. Thank you. One of the benefits of the project is the fact that we are relying on existing infrastructure in the region to reduce our capital cost. So the first thing I'd like to talk about is the transmission line and power supply to the project. We're planning on building a transmission line about 120 kilometres long to the Bundy substation, which is located close to Robertstown, which you can see on the slide south of the project area. The great thing about that is that we'll be connecting into the Southeast Australian grid, which is forecast to have a reliable content of up to 97, or a renewable content, I should say, of up to 97% when we're in production. I think that's quite an extraordinary number. The other great benefit is, of course, the cost of energy at the grid is considerably lower than the cost that competitive projects will be paying in Western Australia if they're powered by gas or diesel. From the site, we're then planning in stage one of project development. We're planning on trucking the concentrate to a rail siding, which will be in the area about 30 to 40 kilometres southwest of Yunta on the main Adelaide to Broken Hill railway line. We'll load rail wagons by front-end loader and transport the product down to Whyalla Port, where we have a conditional agreement in place with CIMEC, which we're currently developing to obtain certainty around our shipments through the Whyalla Port. Next slide, thanks. This slide talks to our the economics of our stage 1 and then stage 2 and 3 developments. I think it's important to add that when we're fully developed at stage 3, our expansion study shows that we have an NPV of $2.5 billion on this project, post-tax IRR of 27%. And importantly, we have an all-in equivalent break-even price of $40. In other words, that's the equivalent price of the 62% benchmark at which our project breaks even. These numbers have been provided to Woodmac, and they're putting us in the bottom quartile of iron ore producers on a value and use basis. So that's taking into account the premium that we're going to earn for our very high quality concentrate that we'll produce, and will mean that we're in a very competitive position once we're fully expanded. Next slide, thanks. Building an ESG platform is very critical to Magnetite Mines and to gain stakeholder support. I'd like to talk at this stage about the very real things that we're doing in relation to ESG. The first thing is that we've appointed a General Manager Sustainability, Alan Kane. We've talked already about the very high renewable energy component that the project's obtaining its power from. Second thing is that baseline studies that we've completed to date show that we've got no threatened species, which is a very positive aspect of the project. And finally, we've got a very active Indigenous engagement program with the Ngadjuri. The Ngadjuri have native title over about 50% of our project area, and we will be commencing Indigenous land use agreement negotiations with them at the latter end of this year. Next slide, please. So far, the milestones that we've achieved so far include release of our successful pre-feasibility study 12 months ago in July 2021. We've completed an expansion study for Razorback that shows that the business case improves as we increase the production levels of the project and we expand with scale. Our definitive feasibility study is progressing very well. We're about 70% complete. I think it's important to add that we're using tier one consultants for that study. So, for instance, our mining is being undertaken by well-regarded Australian consultants, AMC. Global engineers Hatch are looking after the processing plant, and GHD are looking after the non-process infrastructure for us. We've expanded our board, as I've talked about before, and recently we've completed metallurgical and shallow infill drilling at the Iron Peak deposit, and you can expect to see results in relation to that drilling coming out very shortly. On the permitting front, we've got a permitting pathway available to us, and we're planning on commencing the approval process at the latter half of this year. Next slide, thanks. Our indicative schedule has us releasing our financial metrics for the project at the end of the year, and in parallel, we're running a financing process. As I've talked about, we've got permitting and environmental applications underway. We're heading for production at the end of 2024, early 2025. That's, of course, subject to permitting and financing being available in the time shown. Thank you. So if I could just summarise the project at a very high level, we have a very, very substantial resource that we're developing. We've got a staged development schedule with low initial project capital and readily available access to infrastructure and power. We're producing a very high-grade iron ore concentrate that plays to the decarbonisation theme that's currently happening in the market today. And we're developing in a very safe and welcoming environment in terms of government approvals and acceptance of the project. On the corporate side at the moment, there's the key focus on looking at the project and making sure that we're unlocking project value for our shareholders and assessing strategic partnerships for financing. Thanks, Tim.
Thanks, Stephen. Quite a few questions here, actually. You recently, you and the senior management team visited the Razorback project. Can you give us some of the key takeaways from that visit?
Yeah, sure. Look, it was a great opportunity for the team to get together at site, and to be quite honest, it's the first time we've all been together. COVID's prevented that. Look, it became apparent that we've really got to reflect on the scalability of the resource that we have at Razorback, and we're thinking about ways to enhance project value. Two things that have come to mind. First is to increase planned production levels. We're beginning to think about that and questioning whether the current plan is optimal. And the second thing is product grade. Should we be thinking about looking at even higher grade products and capturing higher margins? So they're questions that we're thinking about and working on at the moment.
And just in regards to the DFS, is it still on schedule? And shareholders seem to be asking questions here around more updates.
Yeah, sure. Look, I understand that. The DFS is about 70% complete. There'll be updates coming out on where we're at very shortly. One of the issues is that we've been doing all that very hard engineering and test work over the past quarter. So there's been a lot of work going on and hard to make a series of exciting announcements about it. But we're anticipating producing our economic results from that DFS at the end of this year.
And shareholders can be impatient, obviously. Can they expect any more news on kind of leases with ports and funding and offtake agreements and those sort of things?
Yeah, look, we've had preliminary engagement with investors. We've had some good feedback on the project. We've got port negotiations underway. We've got design of power infrastructure underway. A lot of those conditional agreements and preliminary agreements will start to formulate through the back end of this year. And the answer is yes, we'll have more news on financing as the project progresses.
And how closely do you monitor the iron ore price? Given its recent weakness and kind of a shutdown in China has had an impact, does that change the kind of medium-term strategy at all?
No, look, we've got a long-term sort of positive view on the iron ore price, and I think you've got to remember that we've got a resource here that actually that's going to drive a project with a mine life in excess of 30 years. So we're not distracted by too much short-term volatility in the iron ore price. I think it's important to say though that the iron ore price is still trading above the long-term average, $110, which we're using as our base case iron ore price. The premiums that are being obtained for high-grade iron ore are still intact, and as I mentioned before, a widening as the world decarbonizes. Our fully expanded equivalent break-even price is $40. So, I think we're going to have a very competitive project once it's up and running, and so the short answer is no. We're not too distracted by short-term volatility, and we're staying the course.
And just in terms of that project status, there's a question here: does Magnetite Mines plan to apply for major project status?
At this stage, we don't, and the reason we don't is that the project is being developed in South Australia under the terms of the State Mining Act. So at this stage, we don't see actually any benefits for applying for a major project status because our approvals pathway is very clear. We've met with the representatives from the government. We've got government support for the project. So whilst that might be a good addition to our marketing and positioning from an actual project development point of view, at this stage, it doesn't seem that it's required or would provide any benefit.
Great, Stephen. That's all we have time for. There's quite a few more questions. I'll shoot those through to you over the weekend. Thanks for your time, and we'll catch up later in the year.
Thanks, Tim.